Okay, and welcome back, students who are taking Math for Business and Finance and Math Applications. And we're working on the summary practice test for Chapter 18, and hopefully we can, this will be the last video, which would cover questions 4 and 5, so let me just get to it here. All right, so dollar dress shops inventory at cost on January 1st was $82,800. Its retail value was $87,500. During the year, Dollar purchased additional merchandise at a cost of $300,000 with a retail value of $325,000. The net sales at retail for the year were $295,000. Calculate Dollar's inventory at cost by the retail method. Round the cost ratio to the nearest whole. Okay. Just as an FYI, in the word problems, problem 18-25, that's basically the same exact thing, okay? So if you want just a little bit more review, go back and look at that particular problem, okay? All right, let's see here. And I just remembered that out of my head, so, all right, anyway. So, we have the data, and we have to put it into a format that's useful here. And we're using the retail method here. So let's see, we have a cost and we have retail here. Okay, remember we have to get our cost, we track our cost and our retails, because for the retail method we need to come up with our ratio, our cost ratio, because we are going to figure out what our retail is, and then we use that cost ratio against the retail to come up with our cost of goods sold, our estimated cost of goods sold. Okay, so it says here on January 1, so our beginning inventory was 82,800. And our retail was for that same amount, for that cost, was 87,500. Right. So during the year, Dollar purchased additional merchandise at a cost of 300. So we have a purchase at 300,000. Okay. And the retail value was 325,000. Okay. So that makes our goods available for sale is 382,800 and 412,500 at our retail. Right, so that's available for sale. Okay. Now we have our cost, and remember, we needed that number when we're going to create the ratio, but we need to know what our ending inventory. We need to know what our ending inventory is. So at retail, so we have to take out less our net sales, and that's for the year, and that's let's see here, the net sales at retail, okay, at retail for the year is 295,000. So we subtract that out, and we end up with an ending inventory at retail of $117,500. Okay, so that's our ending inventory at retail. Now we have to, like I kept saying, we have to figure out our cost ratio, all right, between our cost and our retail. So we have our 382,800, and we're dividing that by the 412,500 in order to get the ratio, which ends up being 93%. Okay. So now it's just, since we know that's the relationship, right? That ratio is our relationship between our cost and our retail. Well, if we know our ending inventory at retail is 117.5, we can apply that relationship in order to be able to apply that ratio in order to be able to calculate our cost. Because remember, right now that 117.5 is retail. So I take the 117,500 and I multiply it by my ratio, that relationship, and that gives me an estimated cost, ending inventory cost of 109,275. Okay, and that's it. Relatively simple. Hopefully, I'm not going to go over it again. Like I said, refer back to problem 1825, and I believe in that one I might have gone over the problem and then went over it again. But here, it just, it flowed a little bit easier, so I'm not going to re-explain this one. All right. So let's move on to number 5 here. All right. Okay, it says on January 1st, Randy Company had an inventory costing $95,000. During January, he had net purchases of $118,900. Over recent years, Randy's gross profit in January has averaged 45%. So the gross profit averages 45%. And so I'm already thinking the gross profit method, which tells us here in the next couple of sentences. The company's net sales in January were $210,800. So calculate the estimated cost of ending inventory using the gross profit method. Okay. So we have to calculate our goods available for sale. Okay. And to do that, we start out with our beginning inventory, all right, which was January 1st of 95,000. I had done this in the other video. Oh, by the way, I just said the other video, so I'm referring to video 18, problem 1827, okay, which was the word problem 1827, identical to this one. So you can, I know on that one I went over the problem twice, because that problem and this problem were the only two that you're actually going to see using the gross profit method. So pay attention to these two. Make sure you get them down, you understand the process, okay? Because you will have a gross profit method question, and you only have what was in the chapter, what was on my theory video, and of course the two problems to be able to nail it, okay? Right, so we have our beginning inventory plus our purchases, all right, of 118,900. Which gives me 213.9 as my cost of goods. Oops. Cost of goods available for sale. Right now, we have to subtract out our estimated cost of goods sold. Right, so we're going to subtract out less our estimated cost of goods sold. Now, in order to do that, we have to take our net sales at retail, which is 210,800, and we're going to multiply that by our cost percentage Now our cost percentages, all right, well, this is where this gross profit percentage comes in. Remember, we have revenues less cost of goods sold gives us a gross profit, right? And if we know our revenues are 100% and we know our gross profit is 45%, the difference between the two is 55%. Okay. So that's our cost percentage, the 55%. You know, that's 100% minus the 45% for our gross profit, which gives us 55%. Right? Now, when we take and we multiply the 210,800 by the 55%, we end up with 115,940. So that is our estimated cost of goods sold. Okay, our estimated cost of goods sold is 115,940. We take the cost of goods sold from what was available for sale in order to end up with our estimated ending inventory on January 31st. Okay, and that comes out to $97,960. Okay. All right, so that's it for the summary practice test. I'm not going to go do a recap on this particular problem because on problem 18-27, I worked through the problem just like I did now, and then I did do a recap. So go ahead and watch that video again if you need to work through the thought process again. Here again, just like in the problem number 4, I did it more relatively cleaner, okay, without a lot of jumping around and adding a lot of thought process to it, a lot of my thoughts to it. So it is relatively clean. And if you have any questions, like I said, watch that video again, or telephone and speak with an instructor. Okay, so that's it for chapter 18. It was like I said, it was, most students have a difficult time with this particular chapter, especially LIFO and FIFO. Realize that you will see all of the methods, and that's why go back over them again. I mean, you will have problems, guaranteed, on all of these different things covered in this chapter. And yeah, it's no different than like doing the depreciation, that depreciation chapter. Here's the different methods. Understand one, you can associate it with another in order to be able to understand that one. And that's how you build your bank of knowledge on these different methods, because they're all very similar with a little bit of idiosyncrasies here and there. And once you understand those processes, then it's just a matter of taking the data and putting it in a format that's easily understandable for you and working through the processes. Okay. So with that said, I will see you all in the next chapter, which is on sales, excise, and property taxes. Okay, see you then.